Hey everyone, welcome to Bricks by Byte, your go-to channel for data-driven investment insights. Today we're tackling the big question on every investor's mind. Is Sydney still worth investing in 2025? The market's buzzing and there's a lot of speculation. But you don't make smart investments based on hype. You need hard data. And spoiler alert, we've got that for you. Alright, first up, Sydney rental yields. What do the numbers say? Well, drumroll please. As of August 2024, the median rental yield for units is a juicy 4.5%. Compare that to houses at just 2.8%. Big gap, right? Why does this matter? For you as an investor, it means units are delivering bigger cash flow right now. So if you're prioritizing steady annual returns, these suburbs are your gold mines. Personally, I've had my eye on Lakemba. It's a hotspot for affordability and still offers strong tenant demand. Now houses. Yes, units are outperforming, but don't write off houses just yet. Certain suburbs are bucking the low yield trend. Here are Sydney's house yield heroes as of September 2024. South Windsor is an absolute standout here, offering house rental yields over 4%. If your strategy is long-term, growth-focused investment, properties in these areas are worth considering, especially for families looking to upgrade or settle down. Pro tip for house investors. Pay attention to suburbs with infrastructure projects in the pipeline. These areas can offer both attractive rental yields and future capital growth. Here's where things get interesting. If we average out the gross rental yield for all dwellings in Sydney, houses and units, it's sitting at 3% as of November 2024. What does this tell us? Simply put, units are pulling the numbers up. That's why for cash flow focused investors, apartments continue to reign supreme in 2025. Speaking of growth, are you team houses or team units? Comment below and join the debate. Where do you think the action will trend in 2025? Pause for audience interaction. Now here's where Sydney gets interesting, and honestly explains why rental returns have been so competitive. Vacancy rates in 2024 remained tight across the board. Guys, 1.2%, 1.5%, 1.6%. Do you realize how low these numbers are? It's a landlord's market right now. With such tight supply, renters are competing heavily, especially for apartments. That's also why units are leasing way faster than houses, particularly in urban and semi-urban markets. So, taking vacancy rates into account, units once again come out ahead. Affordability and urban demand are supporting their dominance in the rental market. But houses in family-focused suburbs remain attractive for long-term tenants. Know your audience. But where's the supply? Despite all those cranes on the skyline, housing approvals are still lagging behind demand, and that drives competition not just in the buying market but also in rentals. For you as an investor, this imbalance hints strongly at ongoing price growth potential, especially for well-positioned properties. Now, here's where Sydney maintains its edge over other cities: population growth. This city continues to draw in migrants and skilled workers in massive numbers. Sydney's population grew by approximately 1.25% in the last year, reaching 5,184,900 in 2024. This surge isn't slowing down. Add to that Sydney's international allure and its critical role as Australia's economic hub. Most businesses are based here, and billions are being sunk into infrastructure projects like motorways, metro lines, and airports. These aren't just nice-to-haves. They're drivers of economic activity and property demand. Now, affordability is still a challenge. Sydney's property prices are indeed high, but this is pushing demand toward emerging suburbs, where affordability meets ongoing infrastructure investment. For investors, this is where you can spot opportunities with capital growth and solid rental yields. Super emerging suburbs =, future opportunities, on-screen text. This is where Sydney faces its toughest competition, rental yields. At 4%, Sydney falls behind cities like Perth and Brisbane, which boast higher returns. However, Sydney offers something they don't: consistent capital growth and international desirability. Your investment here isn't just about the returns, it's about the stability and the long-term compounding value of owning property in Australia's leading city. So, is Sydney worth it for 2025? Absolutely, if your strategy aligns with the city's strengths. This isn't the market for quick wins or cash flow chasers. It's a market for those who think long-term, recognizing the role Sydney plays as Australia's centerpiece for growth and stability. To position yourself for success, here's your 2025 plan for Sydney investments. 1. Keep an eye on emerging suburbs near infrastructure upgrades. 2. Focus on units if rental yields are critical to your strategy. 3. Look for areas with long-term demographic and economic tailwinds. Remember, investing in Sydney isn't just about what's happening now. It's about securing your place in Australia's most resilient and globally recognized property market. So what's your next move? Are you sticking with Sydney or eyeing higher yield cities like Perth? Drop a comment below and share your strategy. Thanks for watching Property Pros. If this video helped you cut through the noise, give it a like, share it with a fellow investor, and subscribe to the channel for more weekly insights. And if you're serious about building your portfolio, make sure to follow this channel. This is where I share the data and strategies you won't find anywhere else. See you in the next video.